Well, welcome, and good morning to all of you. I want to, I'm sorry that the other 50 people didn't get here yet, but while they're on their way, we at Praise Temple, and you guys know that Praise Temple, your bishop is a time person, so I appreciate the fact that he are allowing us to do things, so many things at Praise Temple Church. We are not and you guys already know this, we're not a one-dimensional type place. We do many, many things at Praise Temple, and I think it's awesome. I think it's really great. Um, so this is um, this is just one of the things. And if I had to name something for us at Praise Temple, I would call it like maximizing living. It's kind of what I would call it, maximize living, because we do so many different things. And you know as well as I do, because there are more things in Bible study and preaching. There's other things that you need to know as well about living. I mean, and this is just one segment of it, insurance. And I find that a lot of people don't know about different kinds of life insurance. And we're gonna deb into a lot of that today, and prayerfully you're gonna have a better understanding of what different types of life insurance is. So I'm going to welcome you guys. I want to welcome you guys. I know Bishop already did, but I want to welcome you personally um, for three reasons. Three reasons I want to welcome you and thank you for coming. The first reason is I'm just overjoyed that you guys decided to come out, to make that step. Because you know as well as I do that we have a stigma of not being on time, not reading, you know. So that's what and prayerfully some of us are beginning to make that change. I'm kind of going to make sure I'm looking at all black people. I'm sure there's Indians. I'm sure there's a couple of Indians in here somewhere. I know, I figured. My mom was an Indian. I know. I can tell. But no, I can't. But you, that's right. Absolutely. But I'm just so thankful that you guys came out, and I wish more people was here right now, because we need to. Yeah, we know it's Black History Month, which is a great thing, but which is something they may be trying to take away from us. But every day is Black History Month to me and to us. So, but we just have to sometimes we have to come out when there's things offered to us, such as this, and many things, because I think about Hosea 4:6. It says people are destroyed because of lack of knowledge, and it's not that it's not offered to you, it's because we rejected it. So this is offered. I have no problem in taking my time and offering it to you. I don't want to leave this earth without leaving some kind of legacy. Legacy is not always about money. It's about what you leave for people, your people to know and understand and learn about living in life and so many other things. So I want to welcome you and thank you for coming for that, guys. And thank you for stepping out of the box and coming up and showing your bishop and your church that you're about trying to be part of all the dimensional things, the different things that we do here at Praise Temple Church. The second reason is today, of course, you're going to learn about so many different insurance policies. You're going to learn about final expense policy. You're going to learn about whole life insurance policy. You're going to learn about universal life policies. You're going to learn about IULs, equity index universal life policies. You're also going to learn about different term policies. You're going to learn about level term, decreasing term, reducing term, annual renewable term. You're going to learn about those things today. Now, I can't teach you everything that I know, and I can't keep you here all day because you won't stay. But I will tell you within the period of time that we have, I'll teach you some things that that would be very, very important to you. Now, I want you to know also that you're not going to remember everything I tell you. I don't expect you to. But and I'll show you. I'll show you what's going to happen to you. About an hour or two after we get out of this class, you're going to remember about this much of what I told you. Sunday morning, when you come to church for Sunday school tomorrow or regular service, you're going to remember about this much of what I told you. Next week, you're going to remember about this much of what I told you. A couple weeks from now, you're going to remember about this much. And month, you're going to remember about this much, and so on, and so on, and so on. But what I want you to know about that is that you can look across the room at your church, and you can see me either ushering or greeting, knock on the trustee's office. We ain't going to let you in, but you can knock in there and catch me. But you can reach out. You have my phone numbers. I left my cards on the table. You can call me, and I will answer, and I will give you information. So I'm a person you can reach out to and you can touch. So you have somebody that you can do that. So that's a good thing about not remembering everything, but you know somebody that does know. I don't have all the answers to everything, but I'll tell you this: if I can't answer your question, if I don't know the answer, I guarantee you I can get it for you. I don't believe in faking it till I make it. I'm not that kind of people. I don't believe in faking something till I make it. I started out that way. It didn't work. It didn't work out too good. Like Bishop would say, how'd that work for you? Didn't work too good. So you don't want to do that. And the interesting thing about insurance, you have to have license. You have to do continuing education classes every other year. You got to have errors and omissions insurance. So it's things that you got to be compliant. You got to be ethical. You got to do these things. If not, you can go to jail. You can lose your license. So a lot of bad things can happen if you're not doing it the right way. So I have to do that. So that's the second reason why. The third reason why I'm glad you came out is because, see, you folks don't know me like I don't know Bishop. He's my biological brother, but I don't know him. When he was growing up, I was gone. I was away. But the third reason is because you guys are going to be privy to know a few things more about me. All y'all see me sit around. You may see me smile. I may shake your hand. I ain't going to hug you no more because Bishop said you can't. So, especially the married people. So, But anyway, if I do, it's going to be like, But anyway, that you're going to learn a few things about me. So I want to tell you, because really I'm a private person. I'm very private. People think they might know, but they don't. If I didn't tell you something, you don't know me. You don't know me. You can think what you want. You can believe what you want, but that might not be true. So please don't repeat something that you think about me. Only tell what you know if you're going to talk to somebody about anybody, matter of fact. I want to tell you guys a few things. First of all, we're not in the sanctuary, so I was going to do some housekeeping. Make sure if you leave something, make sure you put your stuff away after you finish, because we believe in trying to leave this place as we found it. So make sure you do that. There, of course, is donuts and water and a few brochures on the counter. If you want to read or look at some of that stuff, you're welcome to do it. Take it. I don't care. You're welcome to do that. But I want to tell you a few things about why I'm qualified to do what I'm doing. First of all, I've been in the insurance business for over 45 years. I know you guys thought I was only 35, but anyway, I've been in the business for like 45 years. And I graduated from LUTC class, which means Life Underwriting Training Counseling. I graduated from that. Have had several business courses. And so I've been district manager for insurance companies. I've been sales manager for insurance companies. I've been all over the world, qualified trips. I've been to Paris, France, qualified to go on a trip with production because I've written enough of business to be able to qualify. I finished in this one company, 8th place in the company, and I went on a trip to Paris, France, free paid for my wife and I. So I've been to Hawaii 3 times, Big Island, Maui, Oahu. I've been so I've been Acapulco, Mexico. You name it. I've been in Jamaica. So I've been a lot of places, guys. But that's not as important as learning how to teach this class and and learning about insurance and different types of insurance. What's more important to me is the training that I had and the experience I had in training people and working with people. But I don't know if you guys know anything about continuing education classes, but I've been coordinating a continuing education class for 20 years. And every other year, well, since I've been here like 5 years now. It'll be 6 years in June, believe it or not, Bishop. But every other year, I go back to Delaware and teach a continuing education class. And that's a class that every agent, whether you PNC, life insurance, health insurance, whatever your license may be, you have to do that continuing education class every other year because you need 24 continuing education credits. If you don't get them, they're going to take your license from you. So I've been coordinating that for like 20 years. And I've been actually teaching it for like 15 years. The gentleman that used to teach the class, he was out of Bensalem, New Jersey. Bensalem, Pennsylvania. And he used to do all pension plans for all teachers, educators in Pennsylvania. He did it all. Very intelligent, very smart gentleman. And he got sick, like, after teaching for I coordinated, all he did was taught. I took care of the paperwork, the checks, the money, did all that kind of stuff. So I knew the job. So after teaching for about three or 4 years, he got sick. He got sick and he did pass. And Cape Educational handles the continuing education class out of Pennsylvania. And so I was talking to Ben Wolf, is his name. I was talking to him and, preparing for the next class. And the class was going to be, I had to do it like by February. But in North Carolina, you would license, and Joanne would know that. Your license is every other year on your birthday month. In Delaware, it's every other year, February the 28th for everybody. So it's not on your birthday in Delaware. So I would always do the class in January or the early part of February. This past year, I did it in 2024. I'll be doing it again in 2026. So if you guys don't see me in the latter part of January, the beginning of February, in 2026, I'm probably in Delaware. However, in 2024, I did a class in Florida. We moved our home office, or one of our offices, to Florida. So the owner of Pike Creek Financial Group moved to Orlando, Florida, and our office is in Orlando, Florida now. And so we had like 6 people that needed the continuing education classes there, and because of that, they needed it, and they had been attending my class in Delaware because they moved from Delaware to Florida, and so I did a Zoom. It took like 2 hours, but I did a Zoom, and they got their 24 continuing education credits. So I'm probably going to do that here in North Carolina. Perhaps not a Zoom, but I'm gonna do. I like eyeball to eyeball, kneecap to kneecap. Where's your husband at? Sleeping? He's sleeping. Is he? Tell him I say hello. Tell him I miss him. Okay. Okay. Oh, so no, but he's the head, right? So he should be bringing information to you, right? I mean, well, you his helpmate and all of that, but just tell him I said hello, okay? Tell him I said that. Don't tell him the other stuff I told you. Um, However, where was I at? Yeah, but I did Florida. I did Florida. So I'm probably going to do it in North Carolina this year. So there's a lot of agents who have contacted me about the continuing education credits. Now, the good thing about the continuing education classes that I do, a person is able to get their 24 credits in like 4 hours. It's going to cost you, it may cost you $120, depending on what state you're in. I normally do, most of my people are in Jersey, Delaware, Pennsylvania, Maryland, Virginia. But, and it's different dollar amounts for the state that you're in. So it could be, this is one of the highest states. I think continuing education class, if you do it with us, and it's not so much as it's because of the class and also for the appointments and stuff, the fees and stuff that Cape Education has to do. That's why the price is what it is. And North Carolina is kind of high with that. So to attend my class out of North Carolina and get your 24 continued credits, it's going to cost you here is about $145. But in 4 hours, you're going to come to my class and you're going to be finished in 4 hours. And all you got to do, because we're going to file everything with the state, so you don't have to do nothing. We'll send you a certificate saying that you have it and you go for the next 2 years. But Jersey is one of the cheapest there. I think it was like $115 in Jersey. But it's different amounts for different states. But I've been doing that I've been teaching for 15 years. I've been coordinating for like 20 years. So I do know a little bit about what I'm talking about. I don't know everything, but I do know some stuff. So if a question is asked to me and I don't have the answer I told you before, I'll get the answer for you. But chances are I already know. I probably already know. I'm just, we have no court. It's not Q and A time. It's not Q and A time. We're gonna have that time, but it's not Q and A. Listen, guys, I want to tell you how this is gonna go. I have actually 5, 6, 7, 9, 10. How many people you have signed up, Sister Joanne? Sister Joanne is a life insurance agent as well. I have her assisting me in some of the things. Okay, you guys can help me out. I'm giving out cash prizes today, guys. I'm giving out, where is it at? I got a pocket full of money. I got all this money in my pocket, and I'm going to give it out today. And we're going to have a drawing probably every 15 minutes randomly. I'm going to have a drawing. And if you have a ticket, does everybody have a ticket? Yes. Hold on to that ticket because it could be worth $25. So anybody that randomly I'm going to have somebody pull a ticket. And if your number, you get $25. And the only way you can't win is you didn't give Sister Joanne your name and your contact information. Now, why did we take your name and contact? Why do you think I wanted your name and your contact number? Does anybody think they know why I wanted that? Yes. Anybody else think they know why? Okay, let's go. Anybody else? So you can report to your company that you did this workshop with these. I am the company. I'm a vice president of sales with Pike Creek Financial Group. I am the independent broker. I'm not a captive agent for anybody. I'm an independent broker. You guys know what a captive agent is? Captive agent is when you work for a company like Metropolitan, Prudential, Nationwide, companies like that. That means you can only write their product, which means you may not do the right thing for you. If you're talking to me about insurance, if I only have what Nationwide has or what Prudential have, that's all I can give you. Because if I write for any other company, they're gonna suspend me. They're gonna fire me. Life is not gonna. They're gonna take me off of their because captive. But we at Pike Creek Financial Group, we have a BICES program, and the BICES program enable us to write for any company we want to write for. Of course, you got to get appointed with them, but that's a matter of filling out paperwork and paying them whatever money they want and getting appointed. Providing you haven't lied and cheated, stole money, and been in jail, you can get appointed with them. Sister LaShawn. Does that require you to have more than one license or Now, just one license. You just have to get non-residence license in all the other states that you write in. I'm now you can write for whatever carrier you want to write for. Because they may have a product that may be something that you're looking for that the primary company that you write for doesn't have. Like there's a lot of companies that like MetLife and those companies, they have gotten to the point right now, Met Prudential, they're focusing a lot on retirements and homeowners and auto insurance and P&C and stuff like that. So they have gotten away from a lot of the life products. So, you know, and we'll be talking more about that, different companies and what they do. So I may be able to give you a little more information on that a little later. But that's why you would write for somebody else, and you should be able to do that because I can't, Brother Tyson. You may tell me I can't do insurance for you. If you wanted insurance with me, I first have to sit down with you and ask you what you're looking to do, what you want the insurance to do for you. I can't say, oh, no, you need a term policy. You need a whole life policy. You need a universal life policy. I can't automatically say that. You tell me what you want the policy to do for you. I go back to my product and work out a plan that I feel is ideal for what you are looking to do, Sister Tyson. And I come back and present it to you and tell you what I think would work for you that would solve your problem. I specialized for years. I bought mortgage protection. I bought mortgage leads. And a lot of people didn't understand that they thought, and mortgage leads are pretty much when a person buy a house or when a person remortgage, there's information that goes downtown to the courthouse. So we have a lead vendor that go there and compile that information. Take your information, your name, and your mortgage, and the term, and then they send a letter out a form letter that we have. They send it to you. Post is free, and ask you a couple questions. Your phone number, or you're in good health to the best of your knowledge. A couple simple questions. You fill it out and you send it back to the lead vendor. Then the lead vendor sell it to us. And leads cost like, my God, it costs about $60-some a lead. And it doesn't mean that I'm going to sell you the insurance. It means that you inquired. But it does mean that you have a home. It means that you're kind of stable. That's what it means to me. So those are the kind of people sometimes that you want to deal with, people that you know that's going to probably pay for the insurance. You don't want somebody to buy insurance today and drop it next month because Christmas came or because Thanksgiving. And that's what the seniors used to do years ago, Deacon Marsh. They used to buy these whole life policies for $1,000, $2,000, $5,000. They would buy insurance on every kid in the house, grandkids. They had a $500, $1,000 policy. Easter, if it had $200 cash value, want to cash that in. The agent write you a new policy. Crazy, man, crazy. It's crazy. I don't want to tell you a whole story about that. But anyway, that's kind of like, you were in the insurance business at one point, Deacon Mark. So you probably know something about some of that. But that's kind of like, I can't do something without you telling me what your needs are. And that's why it's important to be able to be a broker and be able to write for several companies. So I got out of the management, had a company car, had all that good stuff. I gave back the company car. I said, y'all had this. I gotta go. I had 24 people I was working, that worked under me. I said, y'all go ahead, y'all do your thing, take your car. I'm going home. I went to work for a car dealership just to get another car because I had sold my car when I got the company car. I worked for a car dealership for 2 months, I think it was. And I traded somebody bought a brand new Maxima. Bought a brand new Maxima, and he traded in his Maxima that he had, fully loaded, whatever, had a million miles on it, but he traded it. It actually had about 90,000 miles on it. But he had everything, and it was a nice car. And I bought that car. And at the time, the fact that I worked for the I worked for the dealership. If you work there, you could buy the car for $250 over and above what they had in it. So they only gave the guy like $6,000 for the car, and because he had so many miles on it, and so I bought the car for $6,250 or something like $6,200 or something like that. I bought it, and that's what happened. I went the other way that particular time, and I took me. Because one thing about a broker, you're strictly commission. You're 1099, so you know, so you're not getting that. You may not get that check every week. So you got to be able to discipline yourself and manage your money, etc. So those are some of the things that I do, guys. A few things about where I've been and what I've done. But I am going to be drawing. The first thing I'm going to do before I get into the product, I'm going to have somebody to pull the first ticket. Number one. Thank you. That's what I need you to give me your ticket because I don't want you doing no cheating.
This one.
Okay, I'll take it.
Is that number one?
We're going to find out. It is. Congratulations. $25. Yep. So, guys, what we're going to do, I want to talk to you right now. I want to get into some of the product. First of all, I want to.
I have one quick question as it regards to license. Are license universal? Now you can go anywhere and sell. For example, you are here now. Could you go to New York and use the same license?
You have to get a non-residence license if you write the business. You got to get a non-residence license for the state of New York. Non-resident. If you a residence license holder in North Carolina, in order to write in any other state, you have to got to get a non-residence license. Unless you take somebody from New York and you pull them across the North Carolina line and you write them here, then you might be able to you might be able to do that, and then you have to use a North Carolina application. New York, the truth of the matter, New York, a lot of companies don't write in New York. Don't write in New York. And another thing, yes.
You asked a question before why you took the name and the number. You asked a question.
Did I finish that? Okay, let me finish. Thank you, Sister Marsh, because I have a tendency to get off track. I have a tendency to get off track sometimes. My brother said I talk a lot, so sometimes I got a couple of notes for myself because I get off track if I don't look at my notes. Sometimes I gotta watch out. I be talking about something that don't have nothing to do with what I'm supposed to be talking about. The second reason, I think I told you the first reason is because now you guys said you said that so that people can, what did you say? Then buy insurance. No. So that's not my reason for having this. It's so that you guys can buy insurance. It's pretty much for you guys to get the information. Now, Sister Joe and I would like for you to buy. We'd love to write you some insurance. We would. We would love to do that. But that's not the reason that we took your name. I'm a businessman first. First of all, I know about taxes. I have license to do taxes. You can't almost pay me to do taxes now. I don't like doing taxes. But I can do them. And but if I ever get audited or something like that, I need to know, this money I'm giving out, you see this? It's about, if I wasn't in the church, I would say it's about $1,000, but I can't say that because I'm in a part of the church. So I can't say that. So But this money here, and it doesn't mean when I do my taxes that I'm gonna write off $1,000 easy. I want you to know that. I'm not gonna lie on taxes. I'm only write off this amount. So, so the other reason, Sister Marsh, that I get your name is so that I have record in case I need it for my taxes. Does that make sense? Okay. So, any other questions that I start and I didn't finish?
Yes, I have another question.
You know what Q&A means, right?
I was just saying, having the name and the number is another means of prospecting.
You want to answer that, Sister Joanne? Because I already told them I'm not trying to get you to buy insurance. I would hope that you have insurance, and I would hope that I would hope that I'm going to tell you at the end why you need to buy insurance. I'm going to tell you that. I'm going to tell you why people need life insurance. I'll tell you that. And I don't want to jump ahead of myself because I can tell you several reasons why you need life insurance. And I wish your kids was here. I wish your younger people was here so they could also get in line with learning about life insurance. And not only that, they probably need to buy insurance. Someone got 3, 4, 5 kids and probably have no life insurance. And that's so sad. It's so sad. And I'll tell you why it's sad later. But y'all can go back and tell your grandkids, your kids, y'all can tell them people. And you can bring them home and have a good dinner for them and tell them, okay, I'm inviting Mr. Spinks over, Sister Joanne, and they're going to write insurance on all y'all. But remember, you buy insurance with good health, you pay for it with money. Okay, how much money you got? If you're not in good health, you may not be able to buy it. Let me go. First of all, I want to tell you, what is life insurance? Life insurance is a contract between an insurance company and a policyholder and an insurer, where the insurer promises to pay a designated beneficiary a sum of money in exchange for a premium upon the death of an insured person. That's what life insurance is. Now, the first thing I want to talk to you guys about is final expense insurance. How many of you have ever, you don't have to tell me, but how many of you have ever turned your TV on and saw Jonathan Lawson on TV talking about $9.95 for you, $9.95 for you, $9.95 for you, and $9.95 for you? How many? Yeah. If you're 55, how much it costs you? If you're 65, how much it costs you? And if you're 75, how much it costs you, Tyson? And if you're 85, how much it costs? What do you guys think? What you guys think this country is about? You think people are giving people no matter what your age is, it's $9.95 for everybody? You don't believe that, do you? It is $9.95, but there's a difference. The difference is it's per unit, and there's different unit amounts. At 55, First Lady, it could be $2,000 per unit. At 65, Brother Tyson, it could be $1,500 per unit. And at 75, it could be $1,000 a unit. And at 85, it could be $500 per unit. But it's still $9.95. He didn't lie. But the fine print under there tells you that, first of all, he's not an agent. He's just, he's not an agent. It tells you at the bottom information. And it also tells you that this policy is limited for 2 years before it's payable. So you got to read, you got to learn, and I'm going to tell you a little bit about final expense. A final expense policy is one company that I'm affiliated with, and I'll tell you, I have, in the 45 plus years that I've been in the business, I've written maybe 4 final expense policies. So it's not my market. I can do it, but it's not my market. But I think I told you I was buying mortgage protection leads. So a lot of people I had written insurance on wasn't final expense people. They could have been older people, but they was healthy enough to buy a regular policy. So they didn't have to buy. Final expenses is like assigned risk. Anybody heard of assigned risk? You haven't?
No.
Really?
No.
Assigned risk, have you heard of a low credit score? And have you heard if you live in a city, a crime area, that your insurance is going to be higher, homeowners insurance is going to be higher, and your car insurance is going to be higher. You heard that? That's what assigned risk means. Hey, Deacon Jones and Evangelist Jones. But that's what that is. Assigned. That's what that means. So final expense is for people that can't qualify for a regular policy. And first of all, you know if your credit score is low, you're gonna pay what? A higher what? Higher interest rate, right? If you go to buy a house, a car, you're gonna pay a higher interest rate if your credit score is probably on 660. I don't know what it is, but if you're over 700, they may give you a good you get a good interest rate on the car, the house, or whatever you're gonna buy. Your credit score can be so low you can't even they won't loan you no money. If you want a car, you gotta go down Clayton. What's that car dealership by the road? Deacon Jones, right down on Walking Man's right. You can go down there and they give you a car and they finance in house. You pay $500 a week, and if you miss a week, they go send a tow truck to get your car. That's what I mean. Assigned risk. That's what that is, guys. It means that you're paying more. Final expense means that you're going to pay more for less.
So you would get that policy when you think you get ready to die, or would you get that?
Well, you got to be close to getting ready to die. You can't be in a nursing home. You can't be in the hospital. No, they ain't coming to no hospital. They ain't writing you nothing.
It's a risk.
That's what I'm talking about. I know it is, and they don't want you. They do not want you.
That's terrible.
I think the word risk tells a lot about that final risk insurance. But most of the time, it's people that doesn't have good health is buying those kind of policies.
Absolutely.
Especially if you had previous cancer.
Preconditioned health problem. Yeah. Pre-existing condition. Yep.
And you just getting something so they can bury you.
Yep.
Wow.
LaShawn, you have a question?
So is that the same as funeral insurance?
Universal life policy.
Yeah, funeral policy.
They use it for that as well. You pay for your burial in advance. You got funeral homes that come out and try to get you to, it's not insurance a lot of times. They get you to just start paying money for your funeral. Yeah, they do that. But it's what's, yeah, right. So it just means that your health is not good. You have health issues.
You have written many of those,
I've written maybe 4 of them in my life
and that
because that wasn't my market. But if somebody came to me that needed that, then I would do it. But I wasn't, that was my market. And it still isn't my market. But I can do it if a person needs it. Now, if I come to you, for example, and you can't qualify for nothing else, and you have no insurance, and once I explain exactly how the final expense work and the cost, and if that's what you want to do, then I'll do it. And if I don't do it, I'm a GA as well. I'm a general agent, which means I have probably about 8 agents that work under me, and most of them are in Delaware and New Jersey. I have one in Detroit, but I actually have one here. I thought she was going to be here today. Sister Judd also is a licensed agent, but she does a lot. I think she does Medicare, health insurance or something. But anyway, but final expense. Let me tell you a few things about final expense. This company has 3 types of final expense. One is like a whole life insurance policy. And I know that I told you guys Q&A, didn't I? But all of you guys already done stepped out on that. Y'all ain't none of y'all just did it. But the fact that it's just us, and I'm definitely going to be within my time, so I'm not going to keep you. But that's okay. That's all right. Sometimes you have to, change this script. Sometimes you can change it, and it's okay because it's just us. And but they have 3 types of final expense. One is like a level of death benefit plan, which means that they either do it for 10 years or 20 years. Just kind of like a whole life insurance policy. You have a 2-year incontestability period. And I'll talk more about the incontestability period in a little while. But it has a 2-year incontestability period. And if God forbid you die, and it's expensive because it's final expense, and it's because you're a risk. You're more risk than Tyson. So so you gotta, they gotta charge you more. So I'm sorry, Tyson. I love you. I love you. I love you. I love you. But so your risk. So they say, so the final expense policy, it means that you buy the policy today. Sure, there's medical questions. There's 12 medical questions. There's 12 medical questions, and if you answer yes to it, you can't buy it. To any one of the questions, you can't buy it. I could go the question with you, but I'm not going to do that. But one is in the hospital, nursing home, some type of heart problem with diabetes and a combination of whatever. It's just a few things. If you answer yes to, you can't buy that policy. Okay, so you might as well just cut it off right there. Any kind of final expense you can't buy. If any of those questions are yes. So basically, that policy is kind of like a whole life policy in a sense, any type of whole life policy, which means it has a 2-year incontestability period, which means that incontestability period means that that's a period of time that the insurance company has the right to investigate whether you lied on the application or not. So if you bought a policy today and you didn't tell me the truth, Sister Fletcher, don't tell your husband I was picking on your kid. Make me wear that red tie again on Usher's Day. I don't like that red tie. I gotta tell you, I did not like that light red tie. But anyway, you wear one now, so we good. We all good. But anyway, at least I only have to worry about hour and a half or something. I'm good. Yeah, I'm good. But what was that? What?
If you said they got 2 years to investigate.
2 years, they have 2 years incontestability.
But if you got past that 2 years, and
they obligated to pay the claim. They can't deny you for no pre-existing condition. Doesn't matter after 2 years. What's that? It doesn't matter. If you get past the 2 years, they can't do nothing. That's what the incontestability is. And the state, the insurance department said, no, you can't. So they give you a 3-year window, and most insurance companies are 2 years incontestability period. So you could have cancer. And if the insurance company end up giving you a policy without checking you out, and you get past that 2 years, they gotta pay the face amount of the policy. Yes. Deacon Jones, you have a question?
Yes, sir. What is the best policy, since it's just us, that you would recommend? I'm 61.
Okay, I'll get back to that. I got my computer hooked up here. I'll show you. I can pull up a couple policies and show you exactly what it costs and show you what I think, after I ask you a couple questions, what the best policy I think that would be better for you. So what was...
situation where you would talk with them privately?
I would. Some of the questions I may have to ask you may not be open to everybody. So I would to design a policy for you to fit your needs with the benefits that you need, I may have to come over to you and say, Sister Tyson, and you give me the answer. They don't know what I asked you, and they don't know what you said.
I have a question within the contestability clause.
Incontestability period, yes, sir.
You said the whole life policy, right?
It could be incontestability is on any insurance policy, except final expense, except the graded death benefit policy and the modified final expense policy. Whole life, universal life term, all of that, incontestability, yes.
So within that 2-year window, that is allowed for investigation.
By the insurance company.
By the insurance company. What if that insured passed away within the 2 years?
That's a question, and I would probably answer that later on. I would probably answer that later on for you anyway. But being that you asked it right now, I would tell you, they return the premium. They give their premium back. If they found that they died from something that let's say that you bought a policy from me, and you had type 1 diabetes, and you didn't tell me, and the insurance company didn't ask for a medical exam, they did nothing. But you deliberately didn't tell me. So when I did the application, when it came to the diabetes, We put no. But I asked you to be compliant. I asked you that question, and you said no. So you deliberately lied. But I write down what you tell me. So you told me you didn't have to put no. But the insurance company still have the right to require an exam or get your medical records. They still have the right to do that. Or check. The first thing insurance company does is, and I'm kind of going ahead of myself, guys, is the first thing insurance company does is do a script check and a driver's license. That's the first thing they do anytime you apply for insurance policy. So if they don't find out about that and they go ahead and issue the policy, and within the first 2 years you die, the insurance company goes back and gets your medical records and find out you were diagnosed with diabetes a year prior to taking the policy out, and you put no on the application, Mr. Insurance Man, and you did that because Deacon Marsh told you he didn't have it. That's what you do. So the insurance company is not going to pay the death benefit. They're going to return your premium, and that's it.
Also, at the same time, if the policy was written and it was years prior, and that person developed the illness.
Anytime after, if you didn't have it at the time the application was written, you're good. No matter, it doesn't matter the 2-year period. So if you bought the policy today and you went to your doctor next week and you was diagnosed with diabetes, and a year later you died from diabetes, insurance company got to pay the claim. They got to pay the face amount. Yes, sir.
Also, that 2-year period, if you die accidental or someone kill you, they have to pay the policy.
On the final expense, absolutely. On the final expense, I'll get into that a little later. But yes, with the final expense policy, since we're talking about final expense right now, if you die accidental, even though there may be a 2-year period, and I'm talking about final expense right now, but even with the final expense, and they're not going to pay off until 2 years, okay, if you die. But within that 2-year period, if you die accidental, they will pay it. They will. So
with the final expense policy, if you are near death, but are not, so say if your doctor says, okay, this person is near death within a 12-month period, are you able to still obtain a final expense policy?
probably not. If your doctor have said that, probably not, because if you're near death, then you got some issues. There's something medically that has to be in your records if you're near death.
But aren't there policies that are specifically for people who
Nah,
are near death?
you can't. I don't care. I'm telling you right now, insurance companies don't want you. They're not trying to give you something for nothing. So I want you to quit thinking. I don't want you thinking that something is free in this country. If somebody tell you something, I understand that.
Yeah, I'm not saying that. What I'm saying
I understand.
is I have known people who have had cancer.
Yep.
Who have obtained insurance.
Mm-hmm.
And when they died,
They got paid.
yes.
Okay. Then first of all, they made it past the 2-year contestable period.
Okay.
You can buy a policy with cancer, diabetes, or whatever, but if you get past 2 years, it's nothing insurance can do but pay the claim.
Okay, maybe that's what happened.
Yes.
My question is, if a person, like you have a family member, and they had bought some insurance, and it was past the 2 years that they died, how can you, and the insurance denied the claim because they said they lied on, but it's past the 2 years that they said, how can you find out? What are you going to do research?
To find out what?
Find out why the insurance didn't pay. Like my father, he had the insurance. He had a heart condition, and they said he lied on the application, but
It was past 2 years?
When he died.
Well, technically speaking, you could go to the insurance department, insurance commissioner, and you can find out. But anytime after 2 years, I don't care what you lied on. The state says they have to pay. Mr. Insurance Company, you got to pay. I'm gonna cover something in a little while that you guys gonna really blow your mind about different things that happen with policies like that. But yeah, go to the insurance department. That's why the insurance commissioner. They will help you. If you have any problem or any uh, problem with the insurance company or something that you believe is this way, and they will investigate it and they will tell you, they'll get back to you on it. But after 2 years, even though you perhaps had something prior to taking the policy out, but they can't deny your claim after 2 years. So, so that's the 10-year, 20-year final expense policy. It again, it acts kind of like a regular whole life policy. You can get paid the next day after you buy the policy, but it's still going to be the incontestability period. They still would check and see that everything was correct on the application, but they can pay. They can with the
Policy that would be paid after just one premium.
after they investigate. After they investigate if it's less than 2 years old.
I think that immediately after you pay the premium, you should be covered.
Well, you bind it. You bind it. Once you pay your see, and that's something that you gotta understand. You gotta pay your premium, accept the policy as applied for.
Yes, but
That has to be done and pay your first premium.
isn't there a situation whereby upon one premium policy issue?
Absolutely. If you pay the yeah, if you
Only one premium, no?
it doesn't matter. It doesn't matter as long as you paid the policy,
Right. I'm
accepted the
talking
policy as
first
applied for by both the insurance company and yourself,
premium. Right.
and done the necessary and qualified health wise if it needed to be done.
You took out a policy for $20,000, right? And your premium is $20 a month. You pay the first premium. Is the company binding upon that point? If you're a person who is
If you have met,
physically well,
yes, yes, the answer is yes. If you met everything that the company asks of you, the first premium, you sign the application, the policy is accepted as applied for. That's part of the conditions. When you get a conditional receipt, if you bought a policy from me and you gave me a check, I'm gonna give you a conditional receipt, and you read that conditional receipt, and it would tell you just what I just told you, that you cover.
right away.
Absolutely. So, guys, let me kind of move on. Let me kind of move on because I want to get into some stuff. Now, the next policy, other than that level death benefit whole life policy, you have the graded death benefit whole life. The graded policy, it says this policy provides the insured with level premiums while the death benefit is graded. The death benefit during year 1, they pay 30%. Year 2, they pay 70%. And the third year, they pay 100%. Basically, what that means, now there's a max that you can only buy only $30,000 worth of insurance. It's a max you can buy with this policy. But this is kind of like a graded death benefit whole life. So if God forbid you die within the first year, and let's say you bought a $20,000 policy and you die within the first year, they give you 30% of that $20,000. And I believe it's like $6,000. You get $6,000 the first year if you die. And if you die within the second year with that policy, the 70% they'll pay. And it's like $14,000. And starting the third year, you'll get paid the whole 100% of the policy, the whole $20,000. And that's kind of the way that policy works, the graded death policy. But again, it's between age 55 and 85. You have to be within the age. You can't buy it at 54 or 35 or what, you can't. So, and the third policy, because I want to get past this final expense. And doing the question and answer later, we can answer some of that stuff. But modified, the third one is a modified benefit whole life. With the modified whole life, first of all, you can only buy 10. Now, this is the worst case scenario. A modified policy. First of all, the max you can buy is $10,000. And if you die within the first year with this modified policy, it will return your premium plus 10% on your money. That's what you get with the modified policy. Now, you got to be in pretty bad shape, but I'm telling you right now, the modified will pay you 10% on what you put in the policy. So just think about it. If you had a policy for what? $10,000, and you was paying, let's say you bought a policy for 10,000. I'm gonna just give you something right quick since I'm there. Let me tell you what, just so you know. I looked at a modified policy for $10,000 for a person 50 years old. For a male 50 years old, for $10,000 would cost them $55.63 for 10,000. For a male 60 years old, it costs you $72.80. And a person 70, it would cost you $121.78. Now, for 10,000. Remember, life insurance is cheaper for females and more expensive for us. And anybody know why?
Yes, because we died early.
You're absolutely right.
Who died?
No, because our life expectancy is not our life expectancy is shorter than females. And there's a reason. Does anybody, so I'm gonna allow you to answer this. Since we're not on QA, but being that question came up, why do you think life insurance is cheaper for females and more expensive for males? Go ahead. Yeah.
I think if women, they go to the doctor more, well,
Go ahead.
Females have a tendency to take on the necessary tests and take care of their.
Kind of what he said.
medical.
Yes.
Is that what he
You
said?
guys got more? Yeah. Yep.
Men don't go to the doctor.
That's it. That's it. We know. What's we can fix it. We can fix it ourselves. All of you guys, Sister Joanne.
And I just want to add also because men and the job risk, the type of jobs that you do, it's rather high risk.
But in any event, I think the premiums are calculated according to life
expectancy. They have a mortality table and it tells you how long you're expected to live. Yeah.
So it's expected that male would die before the
Because of what they said. Because we don't go to the doctor. We don't go until we be ready to die. We be ready to die when we go say, look, you got to drag me out of here. I can't go. I can fix this myself, man. I'm breathing, but but anyway, that's the reason. And but let me flip that. I'm not here to talk about health insurance. I'm only here to talk about life insurance. But health insurance is cheaper for us males and higher for females. Why?
Because men are higher risk. Men are higher risk and they want you to be able to pay your premiums on time so that you will be able to have more access to health, doctors, nurses.
So life insurance is cheaper for males because of what?
Life expectancy, but health insurance is cheaper for men because they want you all to be able to make your premiums on time and be affordable because you are more at high risk.
Anybody else? Why is health insurance cheaper for males and more expensive for female? In the reverse of life insurance.
Because males don't use it.
You know what? I love you, sir. I see why you're an usher.
Males don't use it.
That's exactly right. That's it. Because if you don't use it, we don't charge you too much money. But if you use it, we're gonna charge you more. Y'all go to the doctor, y'all use it every time you turn around. I gotta go to the doctor, I gotta go get my hand checked. My finger hurting, you gone. We ain't going nowhere with no finger ache. Might not go nowhere if our heart's hurt. You gotta almost stop for us to go somewhere. But anyway, that's the reason. I don't want to linger on that and talk, get too deep into that. But that's the reason. So that same policy, just telling you, the modified policy, where you get 10% of your premium back, your premium plus 10% interest on your premium, is on a female for $10,000 is $46.50 and it's $55.63 for a 50-year-old male. So it's like $9 higher for the male. And at 60 years old, it's $59.73 for the female. It's $72.80 for a male. And for a 70-year-old, it's $105 for a female and $121.78 for a male. So since we were there, I just wanted to give you some quick rates on that. So That's kind of, guys. So on the modified policy is the policy where you get 10%, you get your premium back plus 10% on your money within the first 2 years. After 2 years, they pay the whole face amount of the policy. Okay, so I just talked to you guys about the level death whole life. I talked to you about a graded death benefit whole life, and I talked to you about the modified benefit whole life. Guys, I'm around if you need me for anything, any questions or anything. You can always touch base with me. You can get in touch with me. You can do that. So I'm getting away from the founding expense right now, and I'm going to move to a policy called the whole life. Now, whole life is an interesting policy. Whole life policy is, of course, the policy that the seniors used to buy. Like all up, my mom bought it. Bought it on us kids, $500, $1,000. We died. Easter they cashed in, all that kind of stuff. Buy a new policy. But whole life policy is just what it says. It's a whole life policy. That means, technically speaking, it runs the rest of your life. But let me tell you something else about a whole life policy. Okay, so I was just reading something for a moment. But a whole life policy is the most expensive policy that you can buy outside the founder expense policy. Why? I don't need your answer. Why? Because they charge you premiums like you're going to live to 120 years old up front. And they already know that life expectancy may only be 78. They already know that. So we're going to charge you like you're going to live to 120, so the premium is going to be higher. So they charge you. But as long as you pay that premium, whether you're 100 years old or whatever it is, they're going to pay that death benefit if, God forbid, you die. But not only is that policy the most expensive policy, here's the part that I want to really, about whole life policy. I want you to understand something about whole life policy. And I'm going to tell you a quick story about it after I tell you this. But a whole life policy has something called non-forfeiture options. Non-forfeiture options. Some of you have probably never heard of it. Probably know what I'm talking about. I'm going to tell you what it is. The non-forfeiture options are cash value, waiver, cash value, reduced paid up addition, and extended term. I'm going to tell you the story before I tell you about the different features there. One of my clients moved from New Jersey to South Carolina. And she was going to a church there. She joined a church there. And she had a friend that she met a lady there, and they became very friends. So you know how you church people go out to dinner and lunch with people after church. Y'all know what y'all do. But anyway, they would go out to eat and everything. So this lady had said to her, had mentioned something about insurance. And she and my client think I know everything about insurance. She think I'm the best thing since sliced bread when it comes down to insurance. So she said, well, you need to talk to my insurance. If you talk about insurance, you need to talk to my insurance man. So they called me. And come to find out, she lost her husband like a year prior to the time she was talking to me, because she wanted to talk about insurance for herself. And so the first thing I asked her, I said, are you married? Do you have, she said, well, I lost my husband like a year ago. And then I said, did he have insurance? And she said, yeah, but it lapsed. She said, when he got sick, he was sick almost a year prior to death. And during that sickness is when he lost the insurance. And they stopped paying it, so it lapsed. And I said, well, ma'am, how long, God bless you. I said, how long did he have the policy? How long did you guys have the policy prior to it lapsing? She said, we had it for a long time. She didn't give me a specific number of years, but she said she had it for a long time. I said, well, do you know the company that you had it with? She said, yes. I said, do you have the policy? She said, sure. I said, I tell you what, I didn't write the insurance. I'm not the agent. So I can't get the information from the insurance company without your permission. I'm going to call that insurance company. I'm going to merge you in, and you're going to give them the right to talk to me. And they'll tell me anything about the policy that I asked them. They did that. She did that. I said, I'll check it out and I'll get back to you. I asked the person, customer service, whoever she was, and I said, listen, there's a policy number, da 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 da. I gave her the name, and she said yes. I said, she confirmed that there was a policy. She also confirmed that the policy lapsed. I said, well, according to, and I asked her how long was the policy in force, and she told me when the policy was issued and when it lapsed. She told me. I said, well, to the best of my knowledge, there's something called non-forfeiture options in this policy. And what I know about insurance, that policy should be on extended term. Extended term, guys, is you can have a policy, you can buy a policy today, a whole life policy. I'm only talking about whole life policy that has non-forfeiture option. Universal life policies don't have no non-forfeiture option. Term, no. But so the lady said, Mr. Spinks, she said, let me go back and talk to somebody. She came back and said, you're right. The policy is worth $25,000.
Let me get my check.
But it's worth $25,000. So under extended term, guys, once you had a whole life policy for at least maybe 4 or 5 years, it starts to build extended term as well as cash value. Okay. And if you stop paying on that policy and you have extended term period, whether it's a year, 2 years, 5 years, 10 years. Now, usually, I'll just tell you right off top, and this is kind of a guess. If you've had a policy for about 10 years, whole life, you haven't cashed it in, you just lost it, you just stopped paying the premium, you probably have about 8 or 9 years extended term on that policy. That means if you die, if that person dies within the 8 or 9 years, the insurance company is still obligated to pay the face amount of that policy. A lot of the seniors don't know that, guys. They don't know. Some of the older people don't know. Our parents didn't know that. And how are you going to know it? Unless somebody tell you. Who's going to tell you? Bobby Spinks.
Okay.
How many Bobby Spinks are you going to find out here? One.
I think that is supposed to be the sales point.
What did I tell you a long time ago? You're going to remember this much right now. You're going to remember this much tomorrow morning when you come to church.
I'm just saying, at the point of sale, is the only insurance salesman.
It is not.
That clause out.
It is not. Insurance may, what I tell you, I'm telling you, you're going to forget half the stuff I tell you. I can tell you, but you're going to forget it. It is in the policy. It is in the policy.
They tell us if you want to hide something, put it in writing.
Black people won't read. They very seldom read the Bible unless you, my brother here. Now, you had a question. You said.
With the policy you just talked about, when you have cash value on a policy, and you don't pay the premium, they're supposed to take premiums from the cash value and pay off the premium. So the premium's still good.
That is true with a universal life policy. So the policy can't lapse with a universal life policy, and I'll be getting there. Universal life policy, the policy can't lapse until they have used all the cash value. But a whole life insurance policy, it lapses, and that's why they extend the term. You don't have extended term on a universal life policy. So that's why you got extended term, because what you paid in premium have to buy you something. So as long as you don't cash it in, it goes on extended term. But if you cash it in, then that extended term don't work, because that's one of the non-forfeiture options.
Well, we don't read that booklet they send us.
What's that? They was compliant. They was compliant. They did their job. It's like a little print here. And we would pay you. But they know you ain't gonna read that. And they ain't gonna read it if you die. If somebody die, they're not gonna read it. But anyway, that's the non-forfeiture options, guys. So you may have people, you may have relatives that had a whole life insurance policy years and years ago. That policy still might be in force. But that lady, oh, she thought I was the best thing since sliced bread. She loved me. I never met her. Never met her in my life. She was in South Carolina. But they sent her, she sent a death certificate, and they sent her a claimant statement. She filled it out, sent a death certificate, sent her $25,000. So extended term, guys, in a whole life policy, which is not in a universal life policy, but non-forfeiture options. You also have the option, they have something called paid up addition and reduced paid up. Once you've had a whole life policy for a period of time, you can, am I out of your way? Am I getting out of your, am I okay? So reduce paid up. What that means, let's say that same policy, that same person I'm talking about. Let's say she chose not to, let's say he didn't die, but he lapsed the policy like 2 years prior. They could have chose to take a reduced paid up, even though the policy was worth $25,000 if he died. But you could ask for a reduced paid up, and they can give you a paid up policy at that particular time. And it probably would have been $25,000, probably would have been somewhere $8,000 policy, but that would have been a paid up policy for the rest of their life. So that's kind of a whole life policy, guys. And I don't want to, I can tell you more, but you got to buy something from me. Let's have another drawing. Let's have another drawing. I got to get rid of this money. I got to get rid of this money, guys. Did the Joneses get a ticket? Did you? Okay. I got $25 to get out. Did you pick it? Did you call this? Did somebody call this number? You got it?
No, I don't have it. I picked it.
Okay. How you doing, Sister Joy? Number 7. Congratulations. Got a lot of money, boys. It may have been close to 1,000. It's going down. Can't lie to say it was 1,000 because I'm at church. I wouldn't tell you it was 1,000 if I was out of church, Bishop. Okay, we talked about final expense. We talked about whole life policy. I wanted to make sure that you understood that a whole life policy, just to do a quick recap, whole life policy is the most expensive policy you can buy outside of final expense policy. We talked about the final expense policy, which means, of course, we talked about how expensive and how they work, the modified versus the graded death. We talked about the regular whole life final expense policy. We talked about 10% if you die within the first, your premium about 10% with the modified policy. And we talked about the graded death. We talked about the 70% of the policy and the final expense. We talked about those things. We talked about whole life policy. We talked about the non-forfeiture options because I think they're very, very important. I want you to know, I told you I've written about 5 final expense policies in my 45 years plus. But whole life policy, I've only written maybe 3 of those. Now, wait a minute, let me back up. Since the last 35 years I've written, I started out with whole life policies. But the last 35 years, I ain't pretty much touched a whole life policy. Let me tell you this about a whole life policy. What's that? What's that? A whole life policy. Look, I sell to the need of my clients. I sell to the need of my clients. I don't sell to the need of the company. I don't sell to the need of myself. If it's not for you, I'm not selling it to you. I'm going to sell you the most amount of coverage for the least amount of money, as long as it accomplishes what you want it to do for you. That's what I'm going to do. I design a policy for you to fit your needs with the benefits that you need. That's what I do. I'm not trying to make $1 million off of you in commission. That's not my point. My point is, you buy from me, you're comfortable with me, so when Deacon Marsh come over and knock on your door, I'll come over and say, Sister Fletcher, are you interested in life insurance? Well, I got a policy with Bobby Spinks. Well, let me kind of review it. Let me take a look at it and see. Well, Bobby Spinks wrote you a whole life policy, and you're paying $100 a month for it, and you only cover for $25,000 if you die. Oh, yeah, you got a couple of dollars in dividends for cash value, but I can give you $100,000 for $35 a month, and it has living benefits, and it builds cash value on the interest rate. No, you can't. Yes, I can. Let me show you. I'm gonna pull it up on a computer. I'm gonna show you how I can do it and how it works. Deacon Marsh just took me out of your house. You just bought insurance from and lapsed my whole life policy. So when I write a policy, guys, I want you to stay with me. I don't want you to leave me. If I do the right thing for you, you ain't going nowhere.
Oh, so you could have done that for her.
I could have. Absolutely. I could have done that. Yeah, I didn't. I did the best. I sold her the most amount of coverage, the best policy based on what she wanted for the least amount of money. Yes.
With a whole life policy, after a certain dollar amount, do you have to do a medical exam?
Normally not with a whole life policy. And a lot of times with universal life policy, you don't, because they have something called today, even with the universal life policy, they have something called the Lexis program. Lexis program means that it's like an investigating that they do. It's kind of like they can get information like AI and all that kind of, they can get the information in the air. It just pops up a few things about you. You good? Good. So a lot of policies, unless you're buying 500,000, depends on your age. You could, at your age, you could probably buy half $500,000 worth of insurance without doing an exam. Okay. Yes, sir.
So, question: if you have a person that bought a policy years ago,
Mhm.
I don't maybe his whole life,
Mhm.
$10,000,
Mhm.
and they've been paying on that policy for 20 years, it's still the value of it is still $10,000. Is that right?
Mhm.
No matter how much they paid on that policy.
Yes, sir.
Of all of it, so they're really losing if they bought a whole life policy 20 years ago for $10,000, and they've been paying the premium. Do you ever pay it up so you don't have to pay anymore?
No, as I said earlier, there is with that final expense policy with the whole life portion, you can a 10-year payment life and a 20 payment life with the final expense. With a regular whole life policy, you can choose to take a reduced paid up, like I said a little while ago. You can take the reduced paid up, which that 25 might be worth $8,000, but it's paid up for life. But as far as the $20,000 paid up, probably not. Years ago, they used to have many years ago, when I was 25, they had maybe a 20-year endowment policy, a 20-year, 15-year payment life, and those policies you could pay up, and they was paid up after that particular time. They don't really do that
So
too
we
much
need
anymore.
to have our seniors or have our people to have their policies checked out. Somebody, I think many of our people don't know what they have.
They're absolutely right.
Because if you have a $10,000 policy from 25 years ago, and you've been paying on it for 25 years ago, and it still ain't worth $10, it costs $10,000 to be buried, period.
And that's what a lot of
Well, think about it. Think about what you're saying. What you're saying to me, if you buy a house, you got to have a homeowner's insurance.
Correct.
If you buy a car and you owe me, the bank, the money, you're not only going to have liability insurance, I'm going to make you get collision. Why? Because if you go out and tear that car and total that car and you don't have no collision insurance, how likely are you to pay me, the bank, my money? Because you're going to go get another car and you probably won't pay me.
But if I
Right.
am paying on my life and I pass away and it costs $20,000 to bury me, a $10,000 policy that I've been paying on for 25 years is worth nothing. That is not going to cover my foot getting in the game.
No, it is. It's worth what the face amount of the policy is. So what? Absolutely.
So, and I'm saying
Absolutely.
I'm saying that because I know seniors.
Y'all in America, where y'all think he at? Donald Trump is your president, but he wasn't then.
What Pastor is saying is seniors are paying into these policies that they have had since they were 30.
Yes.
They are now 80.
Yes.
That policy is still worth $10,000. If they pass away today, they have
10,000.
paid
10 times.
More than 10
That's
times.
why somebody need to educate them. Stop paying it. It will go on extended term. You got 20 years extended term on it. Why keep paying on it?
That's why we got.
I'm sorry, look, that's why I'm doing this. That's why I'm telling you. Get a policy review, get somebody to review what you have and educate you on it. That's what you do.
Recommend that if someone is doing that now in 2025.
Call me, I'll look at, yeah.
That they get a different policy. Would that policy that they have be in addition to a policy that they would get beyond?
Yeah,
that?
if they can qualify, if it's not too expensive for them and they can qualify for it. Remember I said you buy insurance for good health and you pay for it with money.
They have some policies, I don't know what they call. If you had it for a long time, say you took it out at 25 years old, and it was 10,000. Maybe 25 years from now, it increases. Not a lot, but it increases little by little. It's still not a lot, but it increases. Maybe 30 years from now, it might be $15,000.
Yeah, you can do that with, see, that's, now you're getting into universal life policies. Now you're getting the IULs, you're getting into product like that now. You're getting away from the whole life policy.
I just want to say, with life insurance, the younger
You okay?
are, the
You good?
cheaper it
The
is.
cheaper it is.
So that's the advantage of getting it while you're young. So, because like I have one on my daughter, right? And she's had it for years. I pay $20 on that policy. But if I were to get it when she's 50 or 60, I'm going to be paying $200 a month. So that's the advantage. You might be keeping it all these years, but you only have $15.
I don't think the expense is the question. I think the payout is the question. The payout, the question is, if I am 25, 30 years ago, and now I am 70, and this same policy that I have been paying $20 for, I have tripled that in 50 years for $10,000.
But look at what you're paying, $20.
But $10,000 ain't gonna bury me. That's what I'm saying. What is it recommended for a senior to get an additional policy along with that policy? Because I'm telling you, sometimes $10,000 ain't gonna bury nobody.
But you gotta think about it. Can they raise that policy? I mean, can you bring them? I mean, the premium is gonna go up again. You should be on that same policy.
On the same policy? Now you probably have to qualify for it. They can increase it, but it depends on who it's with and what the situation is, or whether that's the max that you can. I don't know, but you can buy another policy if you're in good health and you're within the age requirement. You can, but it's going to be more expensive, of course, because of your age. The older you get, the more expensive it is, and then you have to qualify health wise. It started out being job insurance. Was it for? Mm-hmm. And you kept it.
And I kept it, and I still have it. And so I probably have to come meet with you about it, but I do remember reading when they send me my yearly
Statement.
report and all of that. After I reached a certain age or paid so much on that policy, if I don't pay anything else,
It'll still continue and benefit.
The value is still there for that policy, and if it lapsed, they would start deducting from the cash value of even if I didn't pay anything else.
And that's normally not with the whole life, because you have the non-forfeiture options. That's normally with a universal life policy. If you have a universal life policy, and that's the next policy I'm going to be talking about, guys. Universal life policy is based on the interest rate, not dividends. Whole life is dividends. Universal life policies is based on interest rate. So when you look at, what's that? Yes, you have a current and you have a guarantee. So universal life policy give you a guarantee and a current, which means today, if you buy the policy today, this is what the rate is. Now, it doesn't mean that this rate is always going to be. It may be 5%. And that 5% is what you make over and above your premium. Okay, that's your cash value. So that 5%, but it could go up to 6%, or it could go down to 4%. But the guarantee might be 3.5%, which means you can't make any less than 3.5% on your money. But with a universal life policy, it doesn't necessarily mean that it can run whole life. because it's based on interest rate and it's based on current and guaranteed, which means, but here's the thing, but a universal life policy, it gives you the option to design the policy so it can run whole life. You can specify a premium. You can name a premium. So the minimum premium may be, and I can show you guys that if we have time, I'll just pull up one policy and show you just to explain it to you. But you can buy, let's say you bought a universal life policy with me for $50,000 and you were 40 years old, let's say roughly. And let's say $100,000 policy. And let's say you was 40 years old and you didn't smoke, you was in good health to the best of your knowledge. And perhaps I didn't give you a preferred rate, I gave you a standard rate. And let's say the $100,000 cost that 40-year-old person $45 a month, okay, for $100,000. And let's say that I didn't do a specified premium. I did a minimum premium. So the minimum premium was $45. Now, if the interest rate don't go up past that 5% over a period of time, let's say over 10, 15 years, if the interest rate don't go up, then it's a possibility, because you're paying a minimum premium, that after 25, 30 years, you might have to increase your premium from $45 to maybe $50 a month. But they send you an annual statement, so you always know, if you look at your annual statement, how the cost of insurance, because it's the cost of insurance, it's expenses, but your annual statement shows that. So you can see that. I always tell people when I write a universal life policy, call me. Your first annual statement, call me. And I want to go, because I get a statement the same time you get a statement. In fact, I get it before you, because they email it to me and they mail it to you. So I said, call me, because I got so many clients I can't call you. Call me when you get it. And I'm going to teach you how to read that statement. So hopefully you'll remember. If not, every year or whatever, call me if you have any questions. But that annual statement would tell you the cost of insurance. It would tell you what you pay in premium. It would tell you the cost of insurance, and it would tell you what the expenses are. Then it would tell you how much cash value you have earned in it this year, and what's your total cash value that you have in the policy. It would tell you that. Now, that's the minimum premium, $45 a month. After 25 years, if the rate doesn't increase, then you might find that after about 25, 30 years, you might have to increase your premium by a few dollars to make sure you cover the cost of insurance. Because anytime the expenses exceeds what your premium is, you're going to have to increase your premium. If you don't increase it and you got cash value, they're not going to tell you to increase it. They're going to start taking it from your cash value. And once they have taken all your cash value, they're going to lapse the policy. So that's what happens. That's why you need to be able to understand that. Understand your annual statement. Now, if you do, where it can be like a whole life policy, you can specify the premium. For that $100,000, instead of charging you a minimum of $45, if I charge you the target premium, it's probably going to run for, even if the rate doesn't change, it's probably going to run, instead of 25, 30 years, it's probably going to run for about 50 years on the target. But the premium is a little higher. Instead of $45, the premium might be $55, but it's going to run longer. You don't have to really worry too much about it. It may run the rest of your life. But if you do a specified premium, I can specify the premium. You say, well, I want this policy to run to 120. I can specify the premium, so it will run to 120, but the premium might be $75 a month. But you have those options with a universal life policy. It's more flexibility with a universal life policy. That's all I pretty much sold. Universal life policies and term insurance is pretty much all I sold. IULs and stuff like that. That's what I sold. I had no reason to sell a whole life policy that has less flexibility. I had no reason to do that. That was then. That was back when they had two insurance policies, guys. They had a whole life policy and they had a term policy. That's all they used to have years ago. What happened in that situation was whole life was the most expensive and the term was considered the cheapest. So they had to have something, but term don't build cash value. So, and whole life does with dividends, but they had to find something in between that would not be as expensive as a whole life policy, and it may be a little more costly than a term, but it would be a policy that could run the rest of your life, and it could build cash value. So that's when they came up with a universal life policy, guys. So that's how that came about.
Does the IUL build cash value?
Yes, absolutely. IUL is going to pay more money, but IULs is a little different. Equity index universal life policy. What that means really, and that's the last policy I'm going to talk about. But that policy is about policy. Also, you can do so many different things with, and you can use it for retirement. I can design it so the least amount of money goes to your insurance, and the most amount of money goes to your investment towards your retirement. But we'll talk about that in a little bit. I'm not going to have to talk about that. I'm not going to have to talk a lot about that, but I am going to bring that to your attention, the last policy I'm going to talk about. But the universal life policy is a policy that most people would fit into the universal life category because it has a lot of flexibility. Now, what I didn't tell you yet, and I'm just going to jump there for a moment, and I'm going to talk to you a little bit about, now we're talking about, when we get into universal life policy, we're talking about policies with living benefits. What does that mean? I may come up to you and say, do you have the old insurance or the new insurance? And what would be your next question? What is the new insurance? Absolutely. That's going to be your next question. And I'm going to tell you, the new insurance is a policy that you don't have to die to collect on. It has the living benefits. Living benefits. Let me tell you what they are. They're terminal, chronic, critical, and critical injury. Let me tell you what they do. Terminal illness means if you're diagnosed with a terminal illness, given up to 24 months to live by your doctor. Once that information is submitted to us by your doctor stating that, you're allowed to collect up to 90% of the face amount of the policy at that point, or any percentage up to. What you don't collect, if you collect the 90%, the policy ends. But if you collect 50%, the remaining remain there until you die. Terminal illness, if you're diagnosed with a terminal illness, given up to 24 months to live by your doctor, once that information is submitted to us by your doctor stating that, you are allowed to collect up to 90% of the face amount of your policy. So you're collecting money before you die. That's the living part of it. Chronic illness is included also in the policy for no additional cost. Some companies charge you additional money, and all companies doesn't cover all the three benefits, all the four benefits: terminal, chronic, critical, and critical injury. Chronic illness means if you become disabled from an accident or sickness, and you can't do 2 of your 6 daily activities of living. It's kind of like a long-term care, guys. Anytime you can't do 3 of your 6 activities, you're allowed to collect up to 3% of the face amount of the policy. Per month, you can collect it monthly, quarterly, semi-annually, any way you want to collect it. We can pay that. Now, whatever you collect, whether it's terminal, chronic, critical, or critical injury, it reduces your face amount of your policy. So whatever we pay you out, it's going to reduce your $100,000 or $50,000, whatever you have. Chronic illness, just remember, anytime you can't do 3 of your 6 daily activities of living, feed yourself, bathe yourself, get yourself out of bed without somebody helping you, you're allowed to collect up to 2%. Transport yourself to the doctor. You can't do those things. Somebody have to. And it doesn't have to be a professional person to come in and take care of you for you to collect. It could be a family member, a friend. Anybody can come and take care of you, and they'll pay you that percentage. Critical illness. If you have a heart attack, stroke, organ transplant, blindness, cancer, Lou Gehrig's disease, anything of that sort should happen with the critical end, you're allowed to collect money. We'll bring you a check. And it's called living benefits, guys. You don't have to die to collect on it. You collect your money before you die. And the last part is critical injury. And that's if you should go into a coma, or you're paralyzed, or severe burns. If anything that should happen, you're allowed to collect on the policy. And all those things, guys, are accelerated benefits, and they consider living benefits on your policy. That's only with the universal life policy. This is Joanne. Alzheimer's, absolutely. Yep, it's kind of like the long-term care. But anybody, I don't know who knows, or if anybody have long-term care, but you don't need the long-term care when you have the accelerated benefits on your policy, because you got it here. Long-term care is very, very expensive. It's very expensive. So those are the features with the living benefits. There's a couple of brochures here if somebody want them. You can always get them from me. You can always call me. I don't care. I'll bring you a brochure, give you information on it. But those things are covered under the all our universal life policy. Universal life policy, IUL, all those policies has the living benefits, which is accelerated benefits on the policy.
That's the policy that the church got there.
I know. Remember I was in a meeting.
That's how y'all cover me. So if I, God forbid that if I become any of those things.
Terminal, chronic, critical.
You
Yep.
can get you another pastor and I'll be taken care of. That's what all pastors.
Your pastor invited me into a meeting. Remember when your agent?
Yes.
Our pastor. Is that what I said? What did I say? I always need her because she's, I like a critic. Keep me on point, right? Because I forget some of the things I say sometimes. I don't forget what I do, but I forget what I say sometimes. I don't do that, Sister Jess. Our pastor invited me, and he had a meeting with his insurance agent that he have had for some time. And he called me and wanted me to sit in with them, and I did. So I know what kind of policies your husband has, and our pastor. So, but I appreciate that because he had enough of respect for my knowledge and what I know to want me to set in. He may not have understood all the language that the guy was saying if he was saying things, because I did in that meeting, I did explain the accelerated benefits. I don't think he was talking too much about it, but I made sure that was spelled out exactly, So that is so I appreciate him inviting me in and trusting me enough to allow my expertise in that business. So guys, you got I'm going to be ethical. I'm going to be what is it? What's that word? When you got to tell the truth all the time. Yeah. I got that. That's automatic. Integrity is automatic. But anyway, that's talking about the universal life policy, guys. And now the policy I want to talk to you about next is the term policy. Now there are so many different types of term policies. The first thing I want to tell you, usually a term insurance is probably the cheapest form of policy you buy. Usually, the shorter the term, the cheaper the cost for the term policy. Now you can do an annual renewable term. You can do a 5-year term, a 10-year term, a 15-year term, a 20-year term, a 30-year term, depending on your age. You can do a level term. You can do a decreasing term. You can do you can do, now I think Prime America has a policy, and I'm not an insurance company calling name. But anyway, Prime America has a policy. They have a thing called their approach is by term invested difference. Normally they never invest a difference. So what they do, they sell you normally a 20-year term policy. And normally the policy is level. Normally it remains level for the 20 years. But that's normally what they do. But term is not always, term is exactly what it says. Exactly what it says. Term, like whole life. Term. Term should be for a certain period. You shouldn't try to buy a term policy and call it whole life. Now, let's say you came to me and you had a whole life policy or you had a universal life policy, and that was fine. That was for death benefit. That was it builds cash value. It can kind of run the rest of your life. But you bought a house for $500,000 or $250,000, $300,000. And you had a husband or you had a family. And you said to me, Mr. Spinks, I want something in case I die to make sure that my family will still be able to stay in this house. And they can pay the mortgage off if they choose to, or at least they have the money to pay the mortgage off, whether they do that or not. So now, but I have a 20-year mortgage. Okay? So the most amount of coverage for the least amount of money would, of course, be a term policy. Now, yes, you can do a 20-year level term, which means it remains $300,000 or $500,000, whatever. It remains that amount for the whole 20 years. The 20 years, and I'm going to talk to you about that in a minute, about conversion privileges with term. Every insurance policy has something called conversion privilege. But just to go back for a moment before I talk a lot about conversion, that policy is level for 20 years. After 20 years, what do you do with that policy, Sister LaShawn? If you bought it for, term don't have cash value, remember? So let's say you bought a 20-year term policy and now your house is paid off. What do you do with the policy? That you don't have to answer that, LaShawn. You're thinking too much on it. You let it go. You don't have to. You can keep it.
But it increases the money.
It changes to an annual renewable term. After that level part, it changes to an annual renewable term. What does that mean? Every year it goes up, guys. Every year it goes up. Absolutely.
Does it automatically convert?
Does it? Mm-hmm. Mm-hmm. No, it doesn't automatically convert, but it automatically goes up. You have to convert it. If you don't convert it and you keep paying the premium, that 21st year, where that policy may have cost you $100 a month, that 21st year, that policy went up from $100 to $300 a month. Then the 12th year, it went up to $500 a month. I have a client just did it. I tried his policy in Delaware. In fact, I got a policy right now. In fact, it just got approved, matter of fact. I did a policy 20 years ago. It was 20 years in April of 2024. I did a policy and mortgage protection program for it was only $100,000 on both of them, 100,000. And it was because 100,000 was not as much as their mortgage balance, but it was what they could fit in their budget comfortably. So sold them $100,000 each, and 20-year level term. And that 20-year ended in April of 2024. I called them a few times, sent them an email. You need to convert this policy because you have to do it. You got to do it within that 20-year period, or you got to do it up to age 70 without evidence of insurability. But what it does, it enables you to change your policy to a permanent policy without evidence of insurability. So if you got a preferred rate today, you was in excellent health. And 20 years from now, you have diabetes, have cancer, whatever it is, it doesn't matter in the conversion. They convert your policy with the same preferred rate. They can't deny you. So they should have done that. And they're still in good health, thank God, because I was able to do another policy on it. But their policy went up from, I think it was about $175 a month. It went up to $700 and some dollars a month. They had been paying $700 and some from April of 2024 to January. In fact, they're still paying it, but I stopped the automatic draft on them while I was doing another policy. So I just got them approved. So now I dropped their coverage down from 100,000 to 75,000. It's an IUL, it's a permanent type policy. The premium for him is $205 a month. He's 65 and she's 66. Her policy is $142 a month for 75,000. And his is 205. I know the premium, I know it because I just did it. So they're paying what is that? 340 some dollars a month. 205 and 142. So they're paying like 245 total premium now instead of 700 and some dollars. And it was getting ready to go up again in April from 700 and some dollars to almost $900 a month. So I wanted them out of that in April. They would not have had to pay that money all that time, and they would not have to do an exam. They had to do an exam to qualify for this policy. In fact, the truth of the matter is they didn't give her, I submitted as a preferred rate, but she had to do an exam. Both of them had to do an exam. And hers came back where she's taking medication for blood pressure and cholesterol, a few things, and the numbers was a little higher. And they rated her from a preferred because she didn't convert to a verified standard non-tobacco. So her premium is going to be, I just ran it, her premium instead of 142, it's going to be 160 something for the same coverage because the way I had to rate her now, the way they chose to rate her based on her health condition. Again, I said, you buy insurance with good health, you pay for it with money. So that is, but conversions is very, very important if you buy term insurance. So if you're going to buy term insurance from any company, find out what kind of product they have, because you can't convert term to term. You can't convert term to term. You have to convert term to some form of whole life policy, whether it be whole life, universal life, IULs, anything like that. You can't convert term to term. And usually anything other than term is more expensive. So you figure, number one, you're older, and number two, it's going to be higher because it's a form of permanent insurance, a whole life insurance. Joanne?
The only thing that you can do with a term life sometimes, and it depends on the company, you can do a return of premium. Some of them will have that clause in there, which you do a return of premium. So everything you take into that policy, sometimes it's like 75%, they'll give you all the premium back at the end of that term year. So that's pretty good. I mean, because you've been paying attention.
Fidelity Guarantee. There are some companies, one company is Fidelity Guarantee. They're a B-rated company. In fact, Mutual Omaha, one of those companies, had to kind of take over their business because their ratings dropped to B rating. First of all, I wouldn't buy an insurance policy from a B-rated company. How do you get your ratings? By paying claims. How do you get a bad rating? By not paying claims. Just want you to know that happens to Fidelity Guarantee. Fidelity Guarantee, Joanne, was advertising this policy, term policy with return of premium. Return of premium at the end of the term. What happens with that? If you don't keep that policy for like 30 years, you're not getting 100% of the return of premium. Let's say that you keep it for 15 years. It may stipulate that you might get a small percentage of it back. If you keep it a little longer, it may say you get a higher percentage, but it's nowhere near the 100% until you closer to 30 years. But she's right. But those policies today, they are still around. Fidelity is still selling a policy like that. But yeah, that's an option if that is something that you have with a cash value and a term insurance policy. Absolutely. But term policies, annual renewable term, the premium goes up every year. I can sell you a policy right now for $100,000, and it may cost you $12 a month for $100,000 the first year. Next year it's going to cost you $30 a month. Next year it's going to cost you $60 a month. The fourth year it's going to cost you $90 a month, and on and on and on and on and on. That's annual renewable term.
As you let it lapse, then you lose all that. After, let's say if it goes up to a point where you can't.
And you just stop it. You have just cancel it. No, you don't get anything back. That's it.
You just lose all that.
Yep. The only time you're going to get anything back from a policy is you have cash value, or you die, or have some type of other kind of features where the policy will pay money. But yeah, just like a homeowner's policy, just like an automobile insurance, you can have a home. My house never burnt down. I don't want it burnt down. I never had a problem, but I kept homeowners insurance. I've owned like 3 homes, and I've always had homeowners insurance. I pay premium every year. Never use it. There's no cash value or nothing to it. Same with auto insurance. If you don't have no accident, you won't pay nothing. But you keep. What's that? What did he say? Tell me what he said, because I didn't hear it. That wasn't for my ears. I see why I didn't hear it. But LaShawn, I just want to say this to you. This country is not designed for you to make money and they're giving you something. Nothing free. I could not remain in business if I wasn't making some money. Anything that's sold to you here is to make money. Insurance companies is the richest companies other than the pharmaceuticals in this country. I'm telling you. So I'm just telling you. So it's not like you just, yeah. You maybe not as long as me. Why you throw that in there? Why you had to throw that in there? Nobody asked you how long I've been here.
But I do know that I have read that families have had life insurance. That this is how the Rockefellers came up onto their money.
Oh, Rockefellers,
They
you
paid
you
into
deep.
life insurance. They paid into life insurance within their immediate family. The father took the insurance policy and cashed the policy in, gave the money to his daughter. His daughter bought a policy and she cashed value into the policy as well. And they did that for generations and generations and generations and generations. And that's how they started off with their millions of
Oh
dollars.
yeah, they bought insurance. They bought insurance on their people, but here's the thing. One way they did it was because somebody could die. No, living benefits is something that just started in the last. Living benefits only been around about 10 years. That's what happened. Well, it's not. Let me tell you, most of these Jewish people and Rockefellers and people like that, they buy insurance on their people because they know they're gonna die at some point. So they're not buying $50,000 worth of insurance. They buying millions of dollars worth of insurance. And the first person died, that $1 million. That $1 million, that's the first $1 million we have. Now, when this next generation die, that's another $1 million. So they start with that because if you're born, you're gonna live and you're gonna die. We don't have no crystal ball. I don't know what tomorrow's gonna bring.
But this is something that is not taught to our culture, how to live in this world. God wants us to be able to live in this world and be able to function like they do, but not do as they do.
Absolutely.
But we're not taught this. We're taught to go to work, make some money, and buy some stuff that we're not going to even take with us when we die. And we're not leaving nothing back for those children who are going to take this money and just blow it.
Well, that's right. I am almost.
Leave the church as your beneficiary.
Well, no, the truth of the matter is, there are churches that do that. There's churches that do that. They leave.
They have to get their money because they're peripheral, whatever they are called. They're people. They buy insurance and then they leave it to the church, and then the church gets the money, and so that's why they can go do all the things they do. But we, on the other hand, I need my money, so we don't take advantage of our benefits when we work it because we say we need that $10 that we're gonna blow anyway.
But also, you gotta admit, now people, insurance policy premium is the last bill you're gonna pay.
Except for the old
people
people.
gonna die.
Except for the old people.
On that point, just hold that point for a minute. And what are you saying?
I was just gonna see if before you end it, if you would talk about what happens when you have an insurance policy on your job, like a life
Okay,
insurance.
I will. But what I want to do, you said, what did you say, Deacon Jones? What were you talking about? You said something about, what did you say?
When? About the kids married.
What did you just say? You just said something. What did you say? Anybody know what he said?
I don't know what he said.
You were saying something about what we do with our money or something. What did you do?
He was agreeing with Lady Spinks.
Yeah, he was agreeing with what Lady Spinks said. He said when you're gone, your children ain't gonna do nothing with the money. They ain't gonna take care of you.
They might burn you, not bury you.
Period.
Okay. Well, I'm going to. Okay. What I'm going to do when I get to the end, guys, before I go to Q&A, we're going to. I'm going to tell you why you need to buy insurance. I'm going to tell you why I need to buy. But I want to do another drawing right quick. I know that I think Deacon Marsh, you guys got to leave pretty soon.
If I put my number down, I ain't watching y'all just know. I ain't just pull it.
We got number 16.
That's me.
It is. Is it? Uh-oh. Most people say that's cheating. picked it too?
Yes.
Your husband picked it? And you won?
Yes, I'm going to lunch.
All right, pull another one. Let's do another one. How many? This is the fourth one I've given out? This will be the fourth one, right?
Number 17.
Wow. Very good. Congratulations. Mhm. You know, you know,
Six already?
what's that?
You reach number 6 and those.
Now I got 2 more to go. I'll make sure
You're gonna give out 6, right?
I am. I tell you what, why don't I do this? Why don't you let me have, well, we already took care of your wife. Oh, you think you're going to win?
We went
Number
past.
2.
I already took care of the wife.
Number 2.
Tell you what you do. If you got to go before I pull the last one,
Right.
give me your ticket. You trust me.
And if you win, don't give it to him now. Just give it to me when it comes.
I'm not going to do that.
I know that.
Okay, if you win, I'll bring your money to Wake Forest. I ain't going to tell you. Okay, tell you. So I got 2 more tickets to draw. So if you guys got to leave, appreciate you coming. God bless you. Yep.
Thanks, man. It's very informative. Great job.
Thank you. Appreciate it.
Thing that I wanted that is missing is the younger people.
I got you. We got to get some kind of way to get them into.
Yeah, because especially those with children. And you have those
And now I'm going to tell these grown folks about them before I close. Why you need life insurance. I'm going to tell you a few reasons why you need life insurance. So guys, I am going to. I told you I was going to talk about IULs. I pretty much talked about it. It's a policy that you can actually. Has so many variations, which means you can actually. It's a great policy to use for retirement. You can do that, and you can get the least amount of coverage for the most amount of money. And so it's a great policy that you. And the other thing that a lot of people, you probably seen it on TV, people talking about taxes. You can buy the IUL and throw all this money in this IUL and end up not paying any taxes on it.
Jesus.
No, Trump didn't do that. Trump didn't do nothing but get Elon Musk to do something for him and help him tell some more lies or whatever. But the situation is, but no, you can do that as long as your policy, as long as it's still in force, as long as you're still paying on it, you can get out of that policy and pay no taxes on your money. We can talk about that later. Talk about that privately between you and depending on whoever it is that I'm talking to. But you can do that with IUL. Always remember, life insurance is not taxable, guys. It's not taxable at all. Not even the. But normally the only way you have with a universal life policy, you have option A and option B with a universal life policy, and that's a policy that option A means it remains level death benefit. So if you die with option A, even though you have cash value, you may have $10,000 in cash value. Your face amount is $100,000, and you have $10,000 in cash value. If you die and you have option A, the insurance company is only paying you $100,000. You're losing your cash value. Option B, as in boy, if you choose option B and you die, you receive the $100,000 plus your $10,000 cash value. But an agent have to tell you, I will show that to people and let them know and explain what option B and option A is. Now, normally the premium, there's a cost for option B, but most of the insurance companies build it in with the premium so you don't see it separately. So what they do, and then insurance companies reduce the cash value. So in other words, they take it from the cash value sometimes. So this cash value may, in option A, you may have $10,000 in 10 years in cash value. If you choose option B, you may have $8,000 in cash value after 10 years. So that's where they take the premium from, instead of charging you in premium up front. But that's something that a real good agent could talk to you